Top 7 Beginner Mistakes in the Stock Market, and How to Avoid Them. Investing in the stock market can be exciting and rewarding, but it's not without its pitfalls. Especially for beginners, navigating the market can be tricky, and it's easy to make mistakes that can cost you money. But fear not, young grasshopper. By learning from the blunders of others, and maybe a few of your own, you can avoid these classic newbie errors and become a savvier investor. Mistake number 1, FOMO, fear of missing out. Seeing everyone around you making piles of cash from the latest hot stock can trigger a panic, leading you to jump in blindly without proper research. This often ends in emotional buying at the peak, just before the inevitable crash. How to avoid it? Resist the urge to blindly follow the herd. Do your own research, understand the company and its financials, and only invest based on your own conviction. Remember, slow and steady wins the race, even in the stock market. Mistake number 2, YOLO, you only live once. Throwing your entire life savings into a single bet might seem thrilling, but it's also incredibly risky. One bad turn can wipe out your entire portfolio, leaving you financially devastated. How to avoid it? Diversification is your friend. Spread your investments across different sectors, asset classes, and companies to minimize risk. Think of it like building a sturdy house on a strong foundation, not a rickety shack on a sandcastle. Mistake number 3, ignoring the cost of trading. Those little fees might seem insignificant at first, but they can add up over time, eating into your profits. How to avoid it? Compare fees between different brokers and platforms before choosing one. Opt for low-cost options and consider commission-free platforms for frequent trading. Every penny saved is a penny earned. Mistake number 4, chasing hot tips. Hearing juicy insider information from your Uncle Bob might sound tempting, but it's often unreliable and could lead you down a dark path of financial ruin. How to avoid it? Stick to credible sources of information like financial news outlets, analyst reports, and company filings. Remember, if it sounds too good to be true, it probably is. Mistake number 5, falling for get-rich-quick schemes. Promises of guaranteed returns and overnight riches are usually too good to be true. These schemes often involve scams, pump-and-dump tactics, or unrealistic expectations. How to avoid it? Be wary of any investment that guarantees high returns with little risk. Invest for the long term and focus on building wealth gradually through compounding and sound investment strategies. Mistake number 6, overlooking the power of compound interest. Albert Einstein called it the eighth wonder of the world, and for good reason. Compounding can turn even small investments into significant sums over time. How to avoid it? Start investing early and let your money grow with the power of compounding. Even small contributions add up over time, so don't underestimate the power of starting small and being consistent. Mistake number 7, letting emotions rule your decisions. Fear, greed, and excitement can cloud our judgment and lead to impulsive decisions like panic selling after a market dip or buying into a hype without proper research. How to avoid it? Develop a disciplined investment strategy and stick to it. Don't let emotions dictate your decisions. Remember, the stock market is a marathon, not a sprint. Patience and a cool head are key to long-term success. Bonus tip: seek professional advice. When in doubt, consulting a financial advisor can provide valuable guidance and help you navigate the complexities of the stock market. Remember, investing is a journey, and learning from your mistakes is part of the process. So keep calm, invest wisely, and enjoy the ride.